I'm a 20-year mortgage industry insider, and in this video, I'm gonna give you the secrets on how to get the lowest rate possible when getting a mortgage. I know there's a lot of videos out there where people are giving their tricks and tips. I'm gonna give you info that they're not talking about. Info that people in my industry don't necessarily want to talk about in this video, and it's gonna get you lower interest rates. For most people, buying a house or refinancing an existing mortgage, it's not something that you do every single day. So it's not something that anybody should really expect you to be an expert at. But the truth of the matter is that most experts, they don't necessarily want you to know how to get a better interest rate. Now, some of the stuff that I'm going to share in this video, the reason that it's not being suggested to you by your loan officer is that it just takes more work. You know, most people are lazy. They don't want to do the extra work because they can still get your deal done. You just might have a higher interest rate. But if you dig a little bit deeper, you have more conversations, you look at different scenarios, a lot of times you can figure out a better path for the consumer. And so you should really be making sure that the person that you're working with is digging deep to find you the best possible deal every single time. So let's start with the most common and really kind of the most talked about way to get a lower interest rate. In fact, I bet that if you reach out to whoever you're talking to for your mortgage and you say, hey, how do I get a lower interest rate? They're gonna tell you this. They're gonna say, hey, you can buy your interest rate down, which is basically like you pay extra fees to get a lower interest rate. But just like everything, the devil is in the details. And so my opinion on buying the rate down is very similar to my opinion on a insurance policy like homeowners insurance, car insurance. You know, the likelihood of you making a claim is very, very, very small. Yet so many people pay extra. They pay the insurance company more just so that in the event when they have to pay a claim, their deductible's lower, but every year they pay more and more in premium. Well, buying your interest rate down, it's kind of the same there because the statistics show that 92% of loans, they never make it to the 7th year. And so when you look at the math in a lot of scenarios where you're comparing the deal that you can get without buying the rate down compared to the deal that you get with buying the rate down, it usually takes you several years in order to get a return on your investment. And so the likelihood of you being in the loan long enough for you to recoup the benefit of the buy down, in my opinion, is not there. And so this isn't a good option. Yet that will be the first thing that your mortgage professional talks to you about when you ask, hey, how can I get a lower interest rate? This, by the way, is something where it's important to understand the difference between your rate and the APR, or annual percentage rate. Now, I got other videos about that, so I'm not going to do a deep dive here, but that's an important note. APR versus the actual rate that you're getting. So let's talk about another way for you to get a lower interest rate, because that's what we're all about. You want to save money. That's why you're here. That's why you're listening to this video. You're watching this. You want to save money, right? And you know, when you ask people in the mortgage industry on, you know, hey, how do I get a better deal? It's like this magical formula that nobody can really give you a straight up answer on. And so that's the point of this video, is to provide clarity. So the next thing that you're going to want to do when you're, you know, hey, how do I get a lower interest rate? So before I dive into the ways to get a lower rate that the industry really doesn't want me to be talking about to you, let me cover the ones where it's basically, it just comes down to the fact that your loan officer is lazy and doesn't want to do the extra work for you to figure all this stuff out. So the first thing would be to look at your credit score. Depending on the kind of financing that you're doing, your credit score is going to play a role in how high or low that interest rate is. So let's say that you're doing a conventional loan where they have loan level pricing adjustments based off of the FICO score that you have. If your FICO score was, say, 679, and you could get a better rate if it was 680 or 700 or 720, well, one of the things your loan officer needs to be looking at for you is to see if there are any easy, quick credit fixes. A lot of times you can pay down a credit card, you can open a credit card. There's all sorts of things that you can do to provide a boost in your score. And there's things called a rapid rescore if you're, pressed for time doing a purchase loan, or if you're refinancing, you got time to work it out. But ideally, you should be getting a strategy provided to you that provides you with the most optimal credit profile for the loan that you're applying for so that you can get the lowest interest rate. And again, the reason why a lot of people in my industry don't talk about this is that it's more work. It takes more work to get a widget through the factory when you got to do a little bit of credit repair on it. If I can get the widget through the factory without credit repair, why should I hassle? That's the mentality of most people. So here's another way that just with some more work, some more number crunching, your loan officer should be able to work with you to figure out how to get you a lower interest rate. Part of what determines the interest rate that you receive is going to be how much money you put into the transaction. Or maybe if you already own the house and you're doing a refinance, how much equity you have. Well, one of the things that they should be looking at for you is, hey, Mr. Customer, if you were to put an extra 5% down, extra 2% down, 10%, whatever, if you were to modify your plan basically, and instead of doing what you intended on, if you just change it a little bit, you could get X amount better interest rate. And depending on this person's goals, how long they're going to be in the house, I mean, you're talking about a significant amount of savings in some scenarios. So, and again, a mortgage professional should be able to easily provide this to you, but it just takes more work, which is why a lot of people in my industry, they don't ask those extra questions. They don't provide those extra options. They're taking you to In-N-Out Burger. You're getting a cheeseburger and getting through the drive-thru. They don't want to give you all the items on the menu. So now let's get into some more industry insider tips on how to get a better interest rate. All right. I'm going to ruffle some feathers here, but you need to be working with a mortgage broker. Now, me personally, I've done it all. I wish I actually knew this when I bought my first house because I made the mistake. I went to a big bank, I went to a direct lender, and I got my loan from them. And I honestly, guys, I got kind of screwed a little bit because if I would have went to an independent mortgage broker, I would have got a much better deal. In fact, statistical data shows that mortgage brokers save consumers an average of almost $6,000 per transaction. It's indisputable. Working with a mortgage broker is going to get you a better deal. But now here's where I'm really going to ruffle some feathers, is that there's different types of mortgage brokers. And at the end of the day, without boring you to death on the business model, you want to work with the broker, not a mortgage broker as in the business model. You want to work with the actual mortgage broker. The reason being, they're the business owner. They can determine their margin. They can decide if they want to do business with you, and maybe that requires them to cut you a deal. But at the end of the day, your best bet at getting the best deal is to work directly with an independent mortgage broker, actually work with that broker. Now, when you're applying for a mortgage, something else that you want to do is shop around. If you want to get the best rate, you got to look in more than one place. Now, most mortgage people aren't going to tell you, hey, you should go shop around. In fact, they don't want you to go shop around. Who wants competition? But most consumers, they go with the first person that they talk to, and that doesn't necessarily mean that they're talking to the right person. In fact, if you're talking to Spaceship Mortgage, how do you think that they pay for the Super Bowl ads? I mean, you are going to get a worse deal by going to that direct lender, that big bank business model. You got to work with the mortgage broker, and you got to shop around. Make sure to negotiate. Ask for the best deal possible. If you don't ask for it, you're not going to get it. Now, I hope you got value out of this. If you did, make sure to hit the like button for me. And if you want to see more content like this, make sure to subscribe. Put in the comments if there's something that you'd like me to answer specifically. We make it really easy for consumers to find out where interest rates are at. I know you go to a lot of websites, you got to input your personal info, all that stuff. If you go to the link here, you can actually see what the national average interest rates are for various types of loan programs, FICOs, all that stuff. And if you want to get a custom rate quote, you can hit that link there. Thanks for tuning in, and we'll see you on the next video.